This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachurdavis. Thanks for joining us at XM.com. Global markets were caught in a holding pattern on Monday, with most assets trading in a relatively quiet manner. Investors seem reluctant to make any portfolio adjustments ahead of what promises to be a volatile week, featuring central bank decisions in the major economies and a cascade of corporate earnings. Fed and ECB officials are almost certain to raise interest rates by another 25 basis points this week, having telegraphed their intentions very clearly. Since the rate hikes are already fully priced in, there is little scope for any surprises. Instead, the emphasis will be on any guidance about future moves, leaving euro-dollar at the mercy of whether Powell or Lagarde sound more hawkish. The wild card this week is the Bank of Japan decision. The yen fell victim to some heavy selling on Friday, following media reports that the BoJ is unlikely to roll out any policy changes this week. Judging by the steep retreat in Japanese yields and the decline in dollar-yen implied volatility, investors have unwound bets of an immediate adjustment in the yield control strategy. Storm clouds are gathering over the Eurozone economy, according to the latest round of business surveys. The PMIs revealed a sharp slowdown in business activity, with new orders declining at an alarming pace, which is a warning sign that economic growth is likely to struggle in the months ahead. Eurodollar fell on the news, slicing below the critical $1.11 region, as the business surveys revived concerns the Eurozone is entering a deeper recession, fueling speculation that the ECB might adopt a more cautious tone with respect to future rate increases. Over in the commodity sphere, gold prices were almost flat on Monday. The yellow metal is being pulled in different directions by opposing forces, with a stronger U.S. dollar countering the drop in global yields following the disappointing business surveys from Europe. Stock markets lost some steam late last week, with tech shares in particular underperforming, as a batch of encouraging U.S. economic data reinforced the notion that the Fed won't be cutting interest rates anytime soon. Another element that has put the brakes on the scorching rally in big tech shares has been the special rebalancing of the Nasdaq 100 index that will go into effect today. The Nasdaq exchange announced it will reduce the weights of the biggest tech giants and increase the weight of smaller stocks to avoid overconcentration. In terms of earnings releases, the show will get started with Domino's today, before Microsoft and Google take center stage tomorrow. This was today's Daily Market Comment. Thanks for joining us at XM.com.